Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your favorite dividend investors out here, the Dividend Diplomats, Bert and Lanny, guys. And today it's all about, is it time to take a bet on this Dividend King? It's down over 20% this year.
Smash that subscribe button, everyone. Give this video a thumbs up. Holla at your boys. Dividend diplomats. We can't wait to talk about this company with that high flying yield, that over 4%. Oh, so juicy yield. And guess what, everyone? They're a dividend king. So they've increased that dividend for 50 plus consecutive years.
Filming this here on the night of March 12th, guys. Yes, the market's down 4%,
Ooh.
maybe 5%. It's down. Run for the hills. No, joking. In fact, when others are running out, time to run in and buy more dividend income for less. And that's where there could be an opportunity here, something that we need to talk about, guys.
Of course.
It's a dividend king, it's a dividend aristocrat, it's a dividend growth stock. Bert owns it, I own it. You might even own it, guys. And, this stock has battled back during volatile time periods where the stock price has plummeted to the 120s, 1 teens, 100s, because the stock's back at $107.28. Again, down not just 21, 22% this year, but down 36% since this time last year. We're talking about the bullseye. We're talking about the red. We're talking about Target. Ticker symbol TGT. So, Bert, Target's on the list here. It's a dividend king. They've been through tough times before. Side note, Bert, do you guys shop Target?
Yes, we do. That's where we get the diapers. We get the life. Target, we said this before on this channel. Target does a great job making it affordable and making it really easy for parents, especially of young kids, to buy their baby supplies, get ingrained in the Target ecosystem. Great deals on the up and up diapers, great deals on all the wipes, all the food and everything. So they do a really good job of getting you into the ecosystem at a young age. And that's why we love them.
Exactly. We do too. Two little ones at home, obviously buying diapers, wipes. We go there a lot, even for some
Mhm.
groceries when they throw some good sales. It's always a great place to go for birthdays, Christmas presents. Great place for clothing for kids as well,
Mhm.
even for adults. I heard their game has actually stepped up quite a bit. People actually like the Target clothing.
Yeah, that's where a lot of their investments gone. It's in those areas, like you just said, the Target clothing. They have that whole gym section that they have. I forget what they're calling it. I was like all in motion. I can't remember, but they've also really boosted. They realized they were getting clobbered by Walmart in the grocery section, so they invested. I know our Target, one by our house, just put a ton of money into revamping that grocery section, and they're doing that nationwide. So they know where they need to win and to compete to step up their game. Groceries, clothing, but they already have the baby stuff too. It's great.
And honestly, for the most part, I think I buy my coffee there because there's always some sort of combination of coffee on sale there. Starbucks coffee, Seattle's best coffee. There's a plenty of solid coffee brands that they always have a nice sale there. There's there's one that's like, essentially it's like Supreme caffeinated coffee. I forget what it's called. But it's usually like 18 bucks a bag, and sometimes you
It
can get it
just
for
gets
like,
injected into my veins.
yeah,
That just really gets me going.
yeah, give me the bean. So Target guys, so down 21.8%. They actually still produce, when you look at the 10K annual results from this last fiscal year that they just released last week, again, 106 billion in sales. So they're still producing over 100 billion in revenue. They still generated $9 in earnings per share last year. Long-term debt has trended slightly up over 5 years from 10 billion to 14 billion. Actually went down slightly from quarter to quarter, but still up over the last 5 years. Relatively, though, to their operating cash flow, that's trended downwards from last year, up from 2 years, but down from last year. And then again, earnings was slightly down last year, but up from 2 years. But Bert, what's management expecting here in the next upcoming fiscal year that they just started?
They're expecting an earnings range that we were talking right before this video. It's a pretty wide earnings range here. An earnings range of $8.80 on the low end to $9.80 on the high end. So a full dollar range for earnings. And that makes sense given everything that's going on in this environment. Target's still facing other headwinds from consumers. They're facing some backlash, which we're not going to talk about, but it's a present thing that's hanging over. You're facing inflation. Facing stretched consumers. It's
It's a
all
tough
hard.
environment. It's
It
tough. It's
is.
a
Yeah.
competitively hard environment from all factors. The
Yeah.
Walmart, Amazon competitive factor, inflation, consumer spending factor.
Yeah.
Again, if there's less spending from the government, if there's cuts happening there, and that means less dollars going out to the consumers, that means less spending happening. If debt's nearing all-time highs, that means again less spending, less borrowing, less spending. And if the wealth is having their wealth diminish from market, that means that they have a tendency to not spend as much as well. So there's a lot of factors going on right now.
Yeah. So that's why you see such a wide range with Target, and that's what makes this crazy because Q2, Q3 could look completely different than Q1 2025. And 2025 as a whole can look completely different than 2024 because of what can happen so quickly. So that's why you see this wide range. But overall, like Lanny said, they're still pumping out operating cash flow. So even if cash flow takes a 50% hit, you're still pumping out nearly $4 billion of cash flow. So that's the thing to remember.
And then, guys, we have to look at the dividend diplomat stock metrics as well. We want to see through the metrics if A, they're undervalued with the price to earnings ratio, B, is the dividend safe with the payout ratio. We'll look at that history of growing dividends, and then we'll look at the yield, but we'll compare it to the 5-year yield average to see if there's more yield now than there historically is. Bert, what's that first metric looking like for Target, and what EPS are we using here?
All we're using $9.15. That's from Yahoo Finance.
So the lower side of that range.
Yeah, they range again, 880 to 980 is what we're expecting. So it's a conservative low end of the range. The price of 107.28, that gives you a price to earnings ratio of 11.72. So a very low price to earnings ratio, well below the S&P 500.
Yeah, exactly. Like gotta like that. I mean, well below Walmart, well below Amazon, right? From a PE standpoint.
Yeah,
Now the payout
just above
ratio.
Walgreens. I'm kidding. I'm
You
kidding.
you own Target stock, so
I
four
don't know. I was
dollars and
just kidding.
48 cents
Easy.
in dividends paid per year. Spread that on the payout ratio, 49%. So right in the middle of that sweet spot, Bert's perfect payout ratio
Yeah.
of 40 to 60%, guys. Right in that dead zone of 50%. Bert,
Dividend.
they're a king, right?
Yeah, they're king. Their dividend growth rate 5 years, 11.67%.
Hmm.
But last year wasn't the strongest year of dividend growth. Not expecting the strongest going forward. I'm expecting it to be low dividend growth in the short term while they're working through some items and while they are trying to figure out where earnings are going to fall and cash flow for that matter.
Yeah, you can't argue that, Bert. Yeah, definitely expect low dividend growth. But the dividend yield has swelled up then to 4.18%. Not only do they cross 2.5%, 3%, 3.5%, 4%. I think we echoed it on another stock that we talked about over this past weekend, but they're well over 4%. They're at 4.18%, which the 5-year dividend yield average is 2.46%. So you're getting 172 basis point margin on that Target stock.
Okay, so just a bit above that 5 year dividend growth rate, just a smidge, just a smidge.
Yeah, almost
Okay.
2x.
All right. So again, these are the metrics: 11.7 PE ratio, payout ratio is 49%. 5 year dividend growth is 11%. They're a dividend king with a yield of 4.18%, down 21% year to date, down 36% in the last 52 weeks. Are there any other balance sheet metrics we want to cover here before we give our final thoughts?
We looked at the current ratio. It's just under one. We prefer well over one, 1x at least, but they're at 0.94x on the current ratio. So wish that was better, but it's not. And again, long-term debt has been trending up over the last 5 years. I'm looking at my portfolio. I own well over 100 shares, so I do have a significant position in this stock. Last price I bought them actually was at 125 a share. So this is actually,
Interesting.
almost
Yeah.
$20 a share less. When we were really gobbling them up, I know I was gobbling them up in the 650s and 60s back a decade plus ago, but $107 definitely is lower than the
You know what?
last time I bought them.
You know what's crazy is I had to zoom out a little bit. Like we're right at the 5 year mark, so this is a good. This is good looking for like the COVID lows. Because remember, this is right when COVID, the market was panicking. There were sell offs, and companies hit their low, and then all the spending was announced, and everything shot up. Target's COVID low, when you look back, was in the mid 90s. So for everything, they went up to 250, and they're back down to almost those COVID low levels for Target, which is insane.
We would have to almost look. I mean, and that they're a bigger company producing more revenue, I would imagine, than 5 years ago, right?
One would hope, right? Yeah, it'd be something good to look into. But I think to your point, the metrics aren't looking terrible right now for Target. Despite all the noise that's going on, despite that wide range of payout ratios, they still have, on a conservative end, a 50% payout ratio. So, all things considered, dividend is still pretty safe amongst everything else that they're working through.
Again, looking, I might take a flyer on a share or so. Again, I have a pretty dominant position here. It's actually probably one of my largest. And I think, Brent, it might even be one of your largest as well.
Mm-hmm. It is. I have a high. So my position's not as large as yours, but it's definitely up there. I think it's. Give me a second here.
You're like calculating.
One plus one plus one plus one plus one. Then that gets you to a position of where is it? Which portfolio is it in? My goodness, Arian. I'm sorry. This is great video watching, by the way. Watching me sort through a sheet.
Let us
105
know if you
shares.
guys.
Yeah. We have 105
Wow.
shares. So
Wow.
I told you it's a substantial position.
Yeah, it's not small. Do you guys own Target shares? Bert, what are your thoughts? Are you waiting and watching, seeing if it gets to the
Yeah.
90s, or is there any buy point for you here?
No, I mean, I think it's a reasonable price right now. If it dips below 100, sure, I'm going to grab a share. This is also one with how it's falling. As I go through some of my portfolio consolidations, as I'm working through it for some of my higher yielding stocks, so I'm going to look to consolidate into a stock. Why not look at Target at 4%? Like it's not the worst one when I have to clear out a $400 position to put the money into.
You're like, why not go all in on Target stock? No, I'm kidding. Are you guys buying Target stock? Do you think it's worth taking a purchase here at $107 a share? Are you waiting to get below 105 or $100 a share? Let us know in those comments below.
If you haven't already, subscribe to the channel. Give this video a thumbs up. What do we have to tell everybody, Lanny?
You're either with us or you're against us, Jack. That was Bertha Hurt and Lanny from the Dividend Diplomats, over and out.